Okay, the next section is really going into the market segments where Mr. Segment touched on some of it. And this one will show you the comparison between June 2010 against June 2011. The main market segments that we have are as follows, and really we really are focusing on these market segments because it's adding a lot of value when you see which market segments should be driven, and our group actually focuses now to manage through these in a more aggressive way, I'll say, because it's all about margins and the business economics of these market segments. So we're into the retail segments, the K-gas, gas section, LPG, exports, supply and trading, the non-fuel business, which is really mainly the properties and also other things like restaurants and really the non-petroleum products in there. Lubricants, bitumen, the reseller market, which we tend to combine with retail. And then we also into aviation, as you all know, and then the commercial business, and then fuel oil. So if you look at the segment reporting, the first half 2010 against the first half 2011, you will see that retail has basically stayed around the 18%, okay, 16.5%, 17%. The significant change there is really in the fuel oil. If you look at fuel oil in 2010, it was barely making 1%. You can see now it's come out very, very strongly with a 10%. Trading last year 43, first half 43.5%. It's around 41% now. Exports also quite a good growth there, from 4.8% to 6% now. Aviation 9% for the first half of the year against the close to 9% now. Our market share volumes actually dropped in the second half of aviation, which was really a deliberate strategy of the board to do that, because as Mr. Segment explained, the aviation industry can be very tricky with the pricing mechanism that it has. So we've actually got a very specific strategy how to handle the aviation business, which actually worked well for us in this, well, from second half last year into the first half this year, because it's delivered a good contribution to the bottom line. So that's about volumes. If you look at a similar graph based on net sales, you'll see trading very big. Mr. Segment did mention that trading, very big volumes, very big sales, but thin margins. So you can see on this graph that the trading is very big, but you'll see in the next graph where the contribution to profitability is reduced. But of course, the trading gives you a lot of synergies about for the whole business, because it's about getting benefits of bringing in the other products and participating in the whole market, really. So there's a lot of benefit to that. On this one, there's not really that much that I want to say, just to see aviation also contributing well at the 7.5% to the 8.5% now that we have. On the GP level, you can see, as I said, trading is now contributing a lot less than on sales, but still a significant contributor. Retail reseller, you can see it's a big contributor to the whole pie, around about 25% or 35% with the reseller. Commercial, about 20%. Commercial, you can even look at fuel oil, where I mentioned on the volumes, it's grown significantly, where before it was contributing on the GP level 1%, it's now at the 14-15% level. Non-fuel, also a segment that we're growing. You'll see it's an area where we will aggressively address as well, and I'm sure a lot of you have seen the new developments that we've done with the service stations, which is really very good for us. On the profit after tax level, it's similar to the other pie chart, where you can see the percentages contribution by the various segments. Again, aviation contributed very well, 19% compared to the first half last year, where it was only 3% because of the margins. Export 16% against 16 this year again. Trading last year first half 23% against the trading contribution of 15% now. LPG, nice growth there from 6% to 8%. Non-fuel from the 6% dropped a bit to 5%. Fuel oil, like I said, that's a good performance from the 1% to the 15%. Lubes also doing extremely well. Those are good margin business that we have. So the business, the group actually focuses on the sectors like this to drive the business. On the balance sheet, you saw it in the papers this morning. Really nothing much to say on that. I just want to focus on the borrowings. So basically this was in the papers. So I'll get to the borrowings later. Sorry, I just forgot the slide is after. You'll see the shareholders' funds in 2009, full year against December 2010, 11% growth. Sorry, the arrows are a bit not aligned, 11. And then June first half 2010 against June 2011, a 13% growth in shareholders' funds. This net borrowing slide is the one that I really wanted to address, and particularly to the banks and the investors who always ask about the borrowings, because if you just let me take you through this, the nature of our business requires you to look at the three factors that affects the whole borrowings that we have, and one should not just focus on borrowings, because if you look at the borrowings line, you will see, if you just look at the two right-hand columns, where December, you can see our borrowings was 4.3 billion, and in December it was 13.8. But, you know, as I'm explaining, you can't just look at the borrowings line, because the nature of the business is that the three line items that you should combine always, because it's the way we bring in the cargoes and how they are financed, is the cash line, the payables line, and the borrowings line. So if you look at those three together, you will see that the net, what I call the net borrowings, actually makes sense. And the reason why you have to look at it that way is that normally when we import cargoes, you know, if it's just loaded and the vessels are on the high seas and it's on the way to us, the LCs are not, haven't crystallized yet, the borrowings haven't crystallized yet, so your borrowings will not reflect anything. However, we provide for that cargo, so the liability will be sitting in payables. So that's why, and then once the cargo has arrived and the LC is payable or the invoice is payable, the bank pays that, and then it crystallizes into a borrowings and it comes out of payables. So that's why you have to look at the two together. The cash is also a factor in the whole borrowing scenario. Remember, the balance sheet is always a point in time. So normally you'll see there's a lot of cash coming in at a specific point, and then a few days later you'll see the cash coming out, and then it gets net off the borrowings. So if you look at the trend now, if you look at it together like that, it actually makes a whole lot of sense. And normally the borrowings that we have is to finance the inventories. So if you look at December 2009, if you net off the cash, payables and borrowings, the net will be 15 billion borrowings, financing inventory levels of about 13 billion. December 2010, the net borrowings is 16 billion, financing inventories again around about 13 billion. June first half, the net borrowings position was 17 billion, 17.9 billion shillings, financing stock levels of 16 billion shillings. June now, that when we closed, there's a net borrowings position of 20 billion, and our inventory levels are 21.6 billion, as you saw from the balance sheet. So it's very important for you to understand that, because I think banks and investors tend to get a bit confused when they see the borrowings increasing so much and they don't really look at the other levels, but you really need to look at those together. On the cash flow, as mentioned earlier on, a very strong cash position. We had a net operating cash position of 4 billion, and then we paid in interest, taxes and investments And the financing activities is really the borrowings line to give us a net position of 8 billion, and we closed with a cash position of 10 billion in June 2011, as I showed in the previous slide. Our market capitalization also showed by Mr. Segman. It's now closing June against it's 17 against June 2010, which was 13, 26% growth there. The market price per share, June closed with 11 shillings 50 against June of 9 shillings 15. Okay, those are just a summary.